Friday, December 9th, market analysis. Stan Ehrlich, good morning. 11:30 California time at the moment. I start out with the S&P 500 as usual and talk about the Dow Jones as well as the NASDAQ QQQ in my first few minutes. You'll remember that last week on Thursday, I pointed out that there were many reasons that the market should, could, and was likely to stop rallying Thursday of last week at the price levels that it had reached during the day. So far, so good. The S&P momentarily, and we have still an hour and a half to go, is slightly lower on the day. 40 cents, nothing to speak of. The interesting part is it was able to get higher than yesterday's high, but not by much, just a little bit. Then it came back down again and challenged the lows and did not get lower than yesterday's low. And here is the 1-minute chart for today, as well as a little bit of the end of yesterday. And most of the lows that you see is below, or above rather, that yellow dashed line, including the one we had a half an hour ago or so. The early morning made the lowest low in the first few minutes and popped right back up again. So support is holding, and going back to the daily chart so we can see it for a longer term perspective, started to hold on Tuesday of this week with a low of 391.64, 391 and a half. The next day we had a low of 391.90 something, and then a little higher at 393.20, and today the low is 394.12. From today's low of 394.12 to the lowest low, which was on Tuesday of this week, and that's the lowest low since the high at the trend line, which is 91.60, you've only got a few points, 3 points or so. So if you drop below today's low before the close and start sliding, all you need is another 3 points, and you will be in new low ground for 3 weeks and on the borderline of being in new low ground for 4 weeks. Not what bull markets do that frequently. So the expectation is that we're going to very soon do exactly that. In the meantime, we're waiting for something. The market says we're just waiting, and there is an FOMC next week, Tuesday, Wednesday. We'll see if that's what it's waiting for. If that's true, then it may not go up very much or down very much the rest of the day or Monday, and then start wiggling around depending upon what the Fed says Tuesday and Wednesday. I expect that we're going to see no significant rally. We're going to see it head south, and very, very soon. And that's exactly what I've said for the last few days, including, of course, starting to do so last Thursday at the high. Go listen to the recording. Next, let's look at the DIA for a moment. Similar situation, but the DIA has gone above its major bear trend line a lot, and it did it over a month ago. Frankly, it did it on November 10th, almost exactly a month ago. It looks like it may be building a small head and shoulder top. If we, in the next day or two, get a little tiny bit stronger or stay where we are for the highs 1 or 2 times, like at 339, 340-ish, and then start sinking, we'll have a measurable downside objective. We'll have a head and shoulder top, and I will outline the neckline and the details if that happens. You're a little premature. You haven't even got the last shoulder high yet. So I am expecting this to head south just like the S&P, but it's not going to make new lows for the whole bear market for the whole year as quickly and as easily as the S&P, and even faster, the QQQ should do it the soonest. We are not really very far from that October low, which I told you was coming 2 months in advance, and we got a blatantly obvious whopper. And the reason it's green is because it's my ER signal bullish engulfing oversold condition combination. My custom code is automated 100%. So It did give us a buy signal at the bottom of this market, period, so far this year. It's been 2 months now. We also sold short at the top of the bull market after COVID, the high day, November 22nd. We got a bearish sell signal on the QQQ, and it was the beginning, the beginning of a bear market with another sell signal a week later. And we have a buy signal that worked not very well, only for several days, and a buy signal that did not work at all, another bad one, very small loss on that. We have a sell signal here that worked for a few days. Excuse me. Yeah, another sneeze. And we have a profound August 16th bearish engulfing red ER sell signal at the top of the 2-month rally and the beginning of the move down to the October 13th, October lows, quote unquote, October lows. I think this is going to break into new low ground, just like the S&P and the DIA very soon, today, Monday, Tuesday, Wednesday, very soon. Let's go look at some commodities. I usually start out with wheat, and I've now isolated on each chart. These are continuation contracts. These are what are also called perpetual contracts. They are not the exact specific month, and they do not roll over. They're constantly making minor adjustments to accommodate the movement of the first two nearby futures contracts. So they do reflect the way the market's moving very, very accurately and provide great signals. And they're great also for doing cyclical research. You might remember I invented the early cycle finder back in 1977. I've written up in about 20 different books. So the bearish engulfing, we picked the top of the wheat market to the day, nothing lately. Next chart. I'm looking for a buy signal, which we just got a couple of days ago. Market went up a little bit the next day, yesterday, and a little bit more today. The buy signal is working, not particularly aggressively, but it started to go up. Perfect. Next chart. Nothing to say here, relatively neutral. Next chart. And I'll move my cursor over into the future here. Okay. New lows, new low close for the last couple of days. It's a downside breakout, but we are a little oversold. So again, like I said yesterday, I wouldn't go short here, although it went down again today. I think we're going to have a rally back up to the resistance area and then turn down again. That's typically what happens after a bearish breakout, which is what we've got pretty profoundly. New lows for quite a bit of time, most of the year. Next chart. And that was, I'm sorry, I haven't been mentioning crude oil. That's good for the market longer term, I guess, lower energy prices. We have a bearish engulfing a couple of days ago in gold. It's come back up some. We're close to proving that the bearish engulfing was a bad signal. Right now, today, we got very close to the high of that bearish signal, which was Monday of this week. So I need it to go down right away. Otherwise, it would be a bad signal. We did get the bottom of the market a few months ago, September 28th. We also got a hell of a good bottom here on July 21st. Next chart. This is silver. We had a bearish engulfing that did not work, and today's the proof. It went above the high of the bearish engulfing early this week. Although it's getting overbought again, we may be building some sort of top. Those signals that are bearish that don't work are oftentimes part of a combination of red bearish engulfing days that are overbought and create some sort of a top. Could be double top, could be head and shoulder, could be something else, as opposed to being the exact high day, which they are very frequently. But you can't have a high for the year except for one damn day. That's all the chance you get, is to pick the one day. Next chart, which we did on Live Hogs back in February 23rd. It's the high of the year. It's red. We also had a red a little bit earlier that didn't work. Another great sell signal, March, and another whopper, August. Lately, we had a buy signal that worked for 3 days, very substantial rally, but now has made minor new lows, lower than the low of the buy signal, and now it's turning neutral to bearish because the buy signal did not hold. Next chart. Live cattle picked off a couple of great turning points here a few months ago. Nothing at the moment. Trading range, trend is still up. I probably expect an upside breakout here next week above recent highs. Don't have any specific upside objective, but you are messing around with long-term historical resistance, top that was way back again early in the year when it got overbought February 10th. So that could cause a little more trouble. Neutral to friendly. This is live cattle. Next, heating oil. Got oversold, bounced a little bit, not oversold now, but still very close. And although I'm still looking for lower levels, I think we're going to see a little rally first and then challenging 2.50 or even lower. If we can break below 2.50, we've got a much bigger bearish top that is built, and it would be a double top. And we did get the highest high and the first high of the double top for months prior and months after. Almost the high day a month and a half ago. Next chart. This is soybean meal. We had a great buy signal in October, a good, not necessarily great sell signal, November 7th, and now the market has broken out to the upside. It's overbought, but it's got a long-term new high, very bullish long-term, but overbought, probably going to have a correction to the downside next week and then back up again. Next, orange juice. Overbought yesterday, I mentioned, and it's come down significantly today. I'd expect it to come down a little bit more, but the trend is up. The trend hasn't changed. Looking for more to the upside on the average. Next chart, coffee. We picked the bottom, rallied for about a week and a half. We're having a retracement. I'm expecting this to turn around approximately where it's at and start to run back up again. I'm looking for more strength. Next, natural gas. Got oversold, popped back up, did close the gap that I talked about a few days ago, coming back and closing the gap. That happened. Now we're bumping into some resistance. The trend is down. I think we're probably going to get a little stronger, maybe up to 7.00. Maybe not quite that high, and turn down again. And that was natural gas. Next is high-grade copper. We got the bottom, and that was on September 28th. It's almost making new highs since then. The trend is still up. I'm looking for higher levels. Momentarily, it's a little overbought, so we might have a few more days down, and then it's going to make higher highs, but soon. Next chart is platinum. Little double top, both occasions overbought. Classic situation. Too bad we didn't get red ER sell signals. And I expect this to maybe go a little bit more sideways and try to break the bull trend line across the bottom of those lows, since we got a buy signal almost at the low. And we had 3 other sell signals that worked pretty darn good in a relatively short period of time, about 2 months. And we picked the top of the market for the whole year, way back in March 9th in platinum. Next chart. Sell signal recently, a couple of months ago. It's still a good sell signal. I'm looking for lower levels. Today we have a double top now. Did not make a higher high. Came darn close. And almost had a bearish engulfing. Not quite. And I think this is now going to head into new low ground. Bearish on cocoa. Next, bean oil. Not oversold anymore. Had a chance to go sideways a little bit. And I'm looking for lower levels to challenge support areas down to 57.80. Not that much lower. Maybe take a day or two to get there. Maybe less. And then it may get oversold again and bounce back up again. Next. Neutral, sideways, nothing to say on sugar for the moment. Next, soybeans. Got to have the same comments. A little friendly, obviously slowly making new highs. The trend is pretty neutral. Next, bonds. Today we have a sell signal. Interest rate futures. Very, very important for the stock market lately. If this chart goes down, rates go up. So this is predicting we've got a high in the bond futures contract, the 30-year long bond contract, and it's going to start to go down. Will it challenge the lows of the trend back in October and early November? It's quite possible. I'm thinking that that is something that you should be expecting. As far as new lows for the whole trend is concerned, I'll save that for a little later. I'm not sure, but I'm turning bearish, period, on bond futures. I have to. It's a bearish engulfing ER sell signal today, just like that top over there on August 2nd. Not quite the same circumstances and price range and so on, but that's it. Plus, we did have a head and shoulder. It was lopsided, and it broke out in a big fashion, classic manner on November 10th. And it had a minimum upside objective that was reached a week and a half, 2 weeks ago. And it did bounce up against resistance and get into it a little bit in the last couple of days. And all of a sudden now, whammo, bearish. Next chart, that was bonds. 10-year notes. I wanted to get a bearish engulfing today in 10-year notes that would complement the bond sell signal. We don't have one. That does not mean it's not going to go down. We did have the bullish formation, the bottom. It did get up to its minimum objective. It also got up to resistance. It had everything the same as the bonds, except the price range wasn't higher than yesterday's high, so we don't have a bearish engulfing, and therefore no red ER sell signal. Next chart. Wheat, we started here. I'm going to end here today. I'm going to skip the sectors and also forex, except to say the euro dollar is almost making new highs for the trend, and we did get a buy signal on the bottom of the euro dollar, the currency pair, September 28th. You have a great weekend. Signing off, Stan Ehrlich.